These three metaverse stocks are primed for long-term growth. Impressive performance in the retail sector translates to explosive growth in metaverse stocks. NVIDIA, new AI chip released in mid-2024 and steadily growing its supply partner network. Adobe, innovative features implemented into prominent services for the technology-based company. Helios Medical Technologies, recent letter of intent from the Quebec Ministry of Health and Social Services to purchase innovative neuroscience technology. Let's dive in. Here are the three metaverse stocks to invest in for the internet's next evolution. Welcome to Timely Investment Research. In September, sales at U.S. retailers defied expectations by increasing 0.7%, demonstrating that households possess substantial purchasing power, a crucial factor in sustaining economic growth. A surge in demand at auto dealerships and online stores fueled this robust upswing. Economists surveyed by the Wall Street Journal initially predicted a more modest 0.3% increase in sales. This impressive performance in the retail sector bodes well for the overall economy, boosting consumer confidence and fueling the appetite for spending. These economic developments have a profound, positive impact on metaverse stocks as consumers have more disposable income to invest in emerging technologies and virtual experiences. These three metaverse stocks are set to grow for the internet's next evolution. Number 1. NVIDIA. NVIDIA is a leading manufacturer of GPUs with AI integrations and develops integrated circuits used in electronic gaming consoles and personal computers. NVIDIA stock is up 222% year-to-date. The global IT market valuation in 2023 was valued at $8.8 trillion and is expected to grow to $11.9 trillion in 2027 at a compound annual growth of 7.9%. The demand for cloud computing services is anticipated to drive the demand for IT services during the forecast period. NVIDIA revenue and earnings per share consistently exceed expectations. NVIDIA has a reported third quarter 2023 revenue of $13.51 billion, which grew 101.48% year-over-year and beat the analyst expectation by 21.78%. Diluted earnings per share of $2.48 grew 843.29% year-over-year, beating the analyst expectation by 30.31%, indicating the company is undervalued. Further financial growth is evident through a 45.81% net profit margin, which grew 367.93%, and income of $6.19 billion, growing 843.29%. NVIDIA's next AI chip, the GH200, is coming in mid-2024 for an undisclosed price, with next quarter's demand for existing AI chips still increasing. The relevance of AI technologies is growing rapidly. NVIDIA CFO Colette Kress concludes that supply will continue to ramp up as cycle time lowers with supply partners adding capacity over the next several quarters. This positions NVIDIA to capitalize on market demand as chief rivals Intel and AMD do not yet have a convincing answer to NVIDIA's generative AI silicon. Yahoo Finance reports 45 analysts having a 12-month mean price target of $634, spanning from as low as $439 to as high as $1,100. With its dominance in the AI market expected to continue, NVIDIA will be a good choice for prospective investors. Number 2. Adobe. Adobe is a technological giant focused on multimedia and creativity products for over 30 million users worldwide. Adobe stock is currently valued at $560.09 per share, increasing by 66.24% year-to-date. Adobe holds a dominant standing in a secure sector. The digital media software industry marked a revenue of $11.4 billion in 2021 and is forecasted to jump to $36.3 billion by 2031 at a compound annual growth rate of 12.6%. Recently, the higher demand for online presence through media, production, and entertainment has contributed vastly to the revenue of this industry's forecast for future growth. In second quarter 2023, Adobe reported strong financials with year-over-year markups for every profit category. Revenue of $89 grew 10.31%, and net income and earnings per share of $1.4 billion and $3.05 grew more than 20% year-over-year. In the recent quarter, they brought in new revenue for ad mainly due to the features implemented in Premiere Software Photoshop, including generative AI. Despite the stock's high price, Adobe's future profitability is closely tied to the capabilities of the generative AI features included in most of the primary product catalog. With the new software enhancements, particularly those involving artificial intelligence and Adobe's commitment to promoting generative thinking for enhanced user experiences, the company expects a steady increase in profits as it attracts more subscribers. This dedication to improving the user experience and driving creativity through generative AI ensures Adobe remains a top choice for professionals and businesses. As Adobe continues to capitalize on the success of its breakthrough feature, the potential of Adobe stock will only escalate. Number 3. Helios Medical Technologies. Helios Medical Technologies is a leading neurotech company in the medical device field focused on neurologic deficits. The company uses an orally applied technology platform that amplifies the brain's ability to engage physiologic compensatory mechanisms and promote neuroplasticity, improving the lives of people with neurologic diseases. Helios Medical Technologies stock is down around 23.48% to $7.79 in the past 6 months, putting it in an attractive position for investors. The global biotechnology market size was valued at $289.2 billion in 2021 and is expected to grow at a compound annual growth rate of 14.28% to $644.4 billion by 2027. Helios Medical boasts strong financials. Revenue for second quarter 2023 increased 115.13% to $256,000, and operating expenses have gone down consistently by more than 4.91% year over year to $3.29 million. Additionally, the company saw an increase of more than 50% for both net income and net profit margin. Although earnings before interest, taxes, depreciation, and amortization is still at negative $3.17 million, there was a 5.57% growth, showing confidence and stability. In early October, Helios Medical announced that it had received a letter of intent from the Quebec Ministry of Health and Social Services for the purchase of 30 portable neuromodulation stimulator devices as part of an initiative to assess the value of using portable neuromodulation stimulator to treat patients with stroke symptoms. Portable neuromodulation stimulator devices are to be provided to at least 5 sites in 5 separate administrative regions within Quebec, and a government-funded initiative will evaluate the benefits of portable neuromodulation stimulator therapy. Being Helios Medical's first and only commercial product, positive results could be the catalyst to send Helios stock to the moon and solidify earnings. Accordingly, Yahoo Finance analysts label Helios Medical Technologies stock as a buy, with the average analyst target price being $4.25. Helios Medical Technologies is primed for explosive growth, and the company is already ahead of the competition through its contracts with the Canadian government and robust financials. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.